Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. Markets continue to be range bound due to absence of fresh triggers. Today, however, there is action on the central bank side. Interestingly, yesterday Brazilian central bank has cut rates to 10.5%, and now markets have the Bank of England rate decision to look forward to. Morning, JK. Do you expect the Bank of England to stick to the June rate cut script, or you see they would take up the data dependent approach?
Uh, Good morning, Swaraj, and good morning all. Uh, Actually, monetary policy direction is extremely divergent right now in the global economy. We have seen some rate cuts, we have seen some rate hike also. Maybe Bank of Japan may be on the verge of another rate hike, going by the statements of the Bank of Japan. The chief looking at the impact of FX movement. Yesterday, Brazil cut rate. Earlier, we had the Mexican central bank cut rate. On the other hand, Indonesian central bank had hiked rate, also partly to defend their currency. And we have the Bank of England meeting today, as you said. There have been divergent views from the MPC members about the rate path. You know, was surprised to see that as many as 12% of the respondents to a poll expect that BOE may cut rate today itself. So that's not an ignorable number, but then it's not majority, it's well below majority. Some people say that Bank of England can spring a surprise just to support the economy. They might take an early action. And also their inflation, though not reaching the target, has come quite low compared to its peak, and it has been falling steadily in the last few months. Let's also remember that it's a election year in UK, and I mean, a surprise cannot be ruled out. Yes, going forward, we have European Central Bank, whose rate cut expectations are again divergent. Some members are saying to be cautious about high cutting rate too early, while majority members, of course, still favor rate cut. Yes, I think I go by the view that in June there will be a rate cut by ECB, but may not necessarily be followed by a series of rate cuts. And then we also have the Bank of Japan. As I said earlier, the the Bank of Japan chief actually mentioning yesterday that if the consumption, rather the cost of living is rising, and if the inflation impact of FX is felt, then they won't mind taking monetary policy action to also to strengthen the yen. So that was and so we have a divergent picture. And in US, we all know that more and more members are now advocating higher for longer and sticky inflation and growth quite strong in US, which is not relenting. So although we have seen some weak numbers, overall the economy is doing well. So there is no imminent pressure to cut rates in US, although they would like to see the inflation lower and bring down the financial cost. So that's the picture as far as monetary policy is concerned. On the currency, very little movement yesterday, all within the range. Yen above 155, inviting more comments from Japan, but no action as such. But one cannot rule out a surprise action from them. Euro and other major currencies have been very rangy due to lack of factors. Actually, no major economic data has been seen yesterday. And we did have, of course, the industrial production from Germany, which came better than expected, but nothing major to impact the currency or the rate cut prospects. We also had data on Chinese forex reserves, and that is supposed to have fallen about more than 44 billion last month. That's quite a drop in the foreign exchange reserves. While it might be a reduction in the value of foreign currency assets to some extent, we also know that Chinese central bank has been acting consistently to rein in the dollar, and that also is a factor that could have brought down the FX reserves. So on the rupee side, again narrow range, but Yeah, as I said yesterday, we are preparing, market is probably preparing for some volatility going ahead as we near the election result. But definitely demand is dominating. We had as much as 6,600 crores of FII selling yesterday in the stock market, bringing the total outflow of FIIs in April and May together to around 3 billion now. So that's a very large number compared to the inflows that we have seen in Jan, Feb, and March. Of course, reportedly, PSU banks have been selling dollars and containing any weakness in the rupee. I think this should continue at least till this range bound activity in currencies, mainly the major currencies should continue until 15th of May, when the US CPI is due to be released. And India, of course, the local factors on and also the hedging activity based on the election outcome expectations are going to continue, but subject to the central bank actions. Today we have some minor data, weekly jobless claims, and then of course we'll have tomorrow the preliminary Michigan consumer sentiment data. So in the absence of any other major numbers, we will have a look at these numbers to assess whether US economy continues to be strong. And of course, we did have Chinese trade data this a while back, and that's a very encouraging number. I think it's going to be positive for the risk, because the trade surplus has gone up to $72.35 billion, versus 58.55 billion of last month. There's been an increase in the exports as well as the imports. So that's an encouraging sign of economic activity in China improving. That's overall good for the risk. But otherwise, overall market remains quiet in the absence of major factors. Thank you.
Thank you, JK. And the major theme which is going on is the monetary policy direction, which seems to be divergent. For example, Bank of Japan is on the verge of hiking rates. Indonesian central bank raised rates to protect the currency. Brazil, on the other hand, cut rates. US, on the other hand, doesn't have a pressure to cut rates as inflation runs higher. So it's currently all over the place. Industrial production from Germany, the data released yesterday was better than expected, but currencies largely remain range bound. And as JK mentioned, it may be range bound till the next CPI number, which is on the 15th. For rupee, we traded in a narrow range, but market is definitely preparing for some volatility as demand for the dollars remain high. Even in equities, there was a 6,600 crore FII selling. So definitely markets are preparing themselves before the election results. And that's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.